What's up, guys? We're going to be talking about how you can supercharge not only your 401k, but your Roths as well, based on some new 2025 IRS rules. So today we're going to be breaking down not only how you can supercharge your 401k savings and potentially save a ton in taxes, but we're also going to be talking about how you could potentially put up to $90,000. That's right, almost $90,000 into a Roth. I promise you, you don't want to miss it. Welcome back, guys. Be sure to hit that like and subscribe button if you like today's content. And of course, if you need help with your own financial plan, reach out to us at www.modernwealth.com. That's modern spelled with no vowels, wealth.com. So let's go ahead and just dive right into it. I'm going to go ahead and share some data here, and I promise I'll try to make it as simple as possible because we're going to be looking at a lot of numbers here. But in 2025, the total 401k contribution amount, this is the total amount that you can put into a 401k. That factors in employee contributions, employer contributions, and voluntary after-tax contributions, which is the mega backdoor Roth component of this whole thing. That's $70,000. Now that number can increase, and we're going to talk about that in a little bit. So let's talk about how we even get to that $70,000 figure. So the employee limit for how much you as an employee can put into your 401k, whether you're working for a company or if you are self-employed and have a solo 401k, the employee portion of your contribution is $23,500 if you're under age 50 and you have no catch-up ability. So $23,500 is the amount that you can put in the employee side of your 401k, either on a pre-tax basis or on a Roth basis. Now, again, I mentioned how the limit is $70,000 for 2025. Well, you can fill up the rest of that limit through a combination of either employer match or voluntary after-tax contributions. And that number is $46,500. That helps you get to that $70,000 limit. Now, how does this all play out? So very simply, let's say that you max out the employee side at $23,500. Your employer gives you $10,000. Now you're at $33,500. We still have a little bit of room to go. So in order to fill up your 401k all the way to that $70,000 max, you're going to go ahead and do a voluntary after-tax contribution of $36,500. You're going to put that into your 401k, and you're immediately going to convert that over to the Roth side. Now, again, this is all dependent on if your plan even has voluntary after-tax contributions as a feature, and on top of that, the ability to convert those contributions over to Roth. Again, this is nicknamed the mega backdoor Roth strategy. If you're not familiar with it, we'll share some content in the description of this video so that you can read up and get caught up on what the strategy is. So that's $70,000 in 401k contributions. Now, if we want to continue to add to it and ideally build up our Roth balance, we can do up to $7,000 in Roth contributions or backdoor Roth IRA contributions in 2025. Now, notice that number is exactly the same as 2024. Kind of crappy, but it is what it is. So theoretically here, I mean, if we played our cards right and it made sense for you from a tax perspective, you could theoretically put $23,500 in Roth contributions on the employee side into your 401k. Any employer contribution that you get, theoretically convert that over to the Roth side as well, and do your voluntary after-tax piece and convert that over to Roth. And that's $70,000 exclusively in Roth dollars. Plus you do backdoor Roth or normal Roth IRA, depending on your income and if you qualify for backdoor Roth. And that's $77,000 in total Roth dollars in 2025 that you could funnel away. That is pretty sick, if you ask me. Now, I mentioned the ability of us being able to potentially do up to $90,000 in 401k and potentially Roth if we play our cards right. So let's go ahead and keep moving along here. So if you're between the ages of 50 and 59, there is a catch up of $7,500 that you can put into your 401k. So the employee limit, again, is $23,500, but you're eligible for a catch up of $7,500 on the employee side. So you can do a total of $31,000 in employee contributions. Again, everything else remains the same with the exception of you also get a $1,000 catch up for your IRA as well. So instead of doing $7,000 into a Roth or back to a Roth, you could do $8,000. So now we're looking at $85,500. Now I know a lot of people watching and listening have probably heard about the catch-up ability that you can put into a 401k once you're over the age of 50. But here is the new rule that applies starting in 2025, and that's the super catch-up. So if you're between the ages of 60 and 63, again, that's between the ages of 60 and 63, you are eligible for a super catch-up, and that super catch-up is $11,250. $11,250. So you combine that super catch-up to your normal employee contributions that you're going to make, which is $23,500, and that's nearly $35,000 worth of contributions that you're making just on the employee side. And again, if you play your cards right here, you take advantage of the employer match, you do the voluntary after-tax contributions if your plan allows for it, and you do a catch-up to a Roth IRA or backdoor Roth IRA, that's $89,250 that you could funnel away potentially exclusively as Roth dollars. Now, again, I just want to highlight it. Theoretically, if you had the ability to, you could potentially have that all be Roth dollars. But depending on your tax situation, it might make sense to have some of that be pre-tax. So for example, maybe you do your employee contributions, in this case, exclusively pre-tax, and to get that tax deduction. And then you do voluntary after-tax contributions on the mega backdoor Roth side to fill it up. So now you have a good chunk of Roth money and some pre-tax money as well. Now, finally, if you're over the age of 64, this is where it kind of sucks that super catch-up goes away. It goes back to that normal catch-up amount of $7,500. So kind of crappy that the rule is written this way. I would suspect it has something to do with Social Security, but that super catch-up is only available if you're between the ages of 60 and 63. So I know this concept of funneling away this amount of money might be confusing. So let's just pull up one more example to tie this all home. So let's say Joe has a salary of $250,000. His employer matches him 3% of that salary, and Joe is 40 years old. So in 2025, he could max out the employee side of his 401k. That's $23,500. That employer match is $7,500. So he's going to take that home to the bank. And then he's going to do $39,000 as a mega backdoor Roth contribution, or more formally stated, he's going to make a voluntary after-tax contribution and immediately convert that over to the Roth. He's then also going to take advantage of the backdoor Roth IRA since his income's too high to contribute directly to a Roth. And there you have it, $77,000 funneled away into pre-tax 401k buckets, Roth 401k buckets, and a Roth IRA. So there you have it, guys. That is how you can funnel nearly $90,000 away, not just into your 401k, but potentially make it all Roth. Now, a common question that I get is, well, that's a really high amount. Maybe you can financially swing that, but I'm not going to have much money for, other saving endeavors. For example, maybe I want to put some money into a brokerage account. I don't want it all in my 401k. Is it okay to forego that? And the answer is absolutely it's okay. If you are someone who it makes sense to funnel that much away into a 401k and you have financial flexibility to do so, go for it. But if you're someone who barely has an emergency fund set aside, and every last penny to your name is only in retirement accounts, well, then that's a situation that I would perhaps pull back a little bit and think, maybe it doesn't make sense to go all out and do the mega backdoor Roth and do all that. Maybe you just max out your 401k and then send the rest over to a brokerage account, so you have some diversification on your balance sheet. So there you have it, guys. I hope you found this helpful. I hope 2025 is treating you well. If you need help with your own financial plan, again, reach out to us at www.modernwealth.com. That's modern spelled with no vowels, wealth.com. I will see you next time.